Hello and good morning to Sandip Sabharwal. Sandip, good morning. Thank you for joining us. Sandeep, everyone in a sense was of the view that the start of the Trump regime would immediately mark some scary announcements which would shake the world. But 72 hours, 48 hours into the new regime, nothing negative, nothing scary. It's pretty much routine, whatever we've heard so far. So, do you think somewhere this entire concern and the fear which world had and financial markets had that a reboot button would be pressed should fade away?
Yeah, Nikunj, if you look at it, the fear has only been in the Indian markets. You look at any other market all over the world, they have actually done well for 2025. India is the only major market which is down YTD 2025. Every other market is up between 2 to 5% or maybe plus minus some of that. So, my expectation also was that President Trump is more practical. So, what happens is there are a lot of announcements that are made, but what gets followed up is more important. And this was seen in the previous presidency also. So I think as a businessman, he wants the economy to do well, and then he's also good at the entire game of negotiation, etc. So it was not supposed to be negative. So, so I think the Indian market fall has been more to do with internal issues related to falling credit growth, high interest rates, lower spending by the government, a year full of elections, which has led to slower growth, low consumer confidence. I think the issues are more internal in India rather than external.
And Sandeep, just taking a leaf from that, I was just going through one of your notes, which indicates that, this entire chatter about the RBI governor now looking to increase LCR. Tell me, what are you hearing on the same? And if it were to be true, what could be the ramifications?
Under the previous governor, they had announced that from 1st April 25, the liquidity coverage ratio would go up by another 5%. So what that means is banks need to put aside another uh, some amount of more cash on the side, which becomes unavailable for lending. Now, at a time when credit growth has already halved, such measures lead to a further deceleration of economic growth because credit growth is directly linked to GDP growth. So now reports indicate that the new governor is relooking at that entire move, and we could see relaxation on that or delayed implementation or no implementation at all. We don't know. We are not privy to that information. But I think the review itself is a good move because it indicates openness to address the issues which the economy is facing today. So I think that should be if that review actually leads to those moves being postponed significantly or not being implemented right now, it will be a big positive for large banks.
So, Sandeep, if the global concerns have not multiplied into a scary, Trump shock, if locally things are looking better, so are we nearing what could be called as a near-term bottom then?
I would think so. I think sentimentally, markets should have already bottomed. Every person which I talk to is now negative on the markets, and many of the people over the last few days have talked of should we sell the portfolios, etc., and go into cash. So I think these kind of sentiments normally indicate that we should be more near the bottoming of the markets rather than at the peak. The more intriguing factor in India is why are the foreign investors selling so much, even at lower and lower valuations? And I think I don't have a clear answer to that. X of the tax changes, X of the fact that they might be finding better opportunities elsewhere. So all those things are fine, but this kind of unprecedented selling where I think we are at now 65,000 crores already sold for the month of January itself. I think that's the thing which is putting pressure on the markets. Whether will that reverse or not? Eventually, it should reverse, but the timing is uncertain. But I think uh, pure on valuation and sentiment wise, we are at a stage where I would think that downside could be very limited.
So, Sandeep, are there stocks wherein you are seeing at least a hint of good earnings or visibility thereof, and they've fallen enough to come into a buy or value zone?
So I think on the large cap side, many stocks look decently placed. I think uh, Reliance comes top to mind because the results were decent. The stock bounced back and it's given up some of the gains. So I think that could be one stock which could do well this year. Among the financials, Kotak results were pretty decent. So the stock ran up post that. Now it's given up some of the gains, but I think that could be one stock which could come back because last 5 years it's actually done nothing and valuations have adjusted. Axis Bank results were below expectation, and the management commentary was not all that negative, but the stock's taken a significant beating. So I think at these levels, that also looks decently placed. Technology sector results have been mixed. Like some companies have talked of very good improvement, some companies not. So I think some of the mid-cap companies like Coforge, Persistent indicated strong growth, but then their valuations are high. I think TCS is something which could potentially outperform at least the large cap IT universe. And so I think that's what is coming to mind. Many of the companies are still to report.
On a month-on-month basis. On the flip side, though, there's Cyient, there's DRL. Both those earnings have been a miss, and there's Mankind as well, wherein the Q3 revenue and margin has come in line with estimates, and the PAT has actually declined on rising finance costs. So these are a bunch of stocks which are going to be in focus right now. Sandeep, within mid caps, anything interesting that you've spotted when it comes to the earnings so far?
Mid-cap earnings in general seem to be resilient. So very few mid-cap companies are actually reported. Among them, some of these companies related to EMS space have reported. So their results are decent, but then the margins are so low that very tough to take a call on these companies. On the mid-cap side, the first movers have been obviously the IT stocks, and their results have been all over the place. And like we said, that couple of companies reported strong numbers, but couple of companies' numbers have been uh, not very great. I think mid-cap earnings will pick up from the next week onwards for the next 2 weeks. So then we'll have a better idea of how the overall space is doing. On consumer durables also, like Polycab and Havells reported results were muted, but the companies are indicating better prospects in the fourth quarter. So they are not all that negative. So I think that's where things stand.
It's just one of those phases of the market where mid cap, in a sense, in general, has done nothing which could be called as very special. There are a lot of themes which have started reversing. Lot of themes. For example, PSUs, complete reversal in PSUs. Solar, complete reversal in this entire fancy theme called solar. Stocks are down 20, 25, 30% from the highs. What could be interesting in this market fall, Sandeep, could be insurance. Their numbers were not bad. I looked at HDFC Life numbers, decent. 3-4 years, like you said, Kotak Mahindra Bank insurance stocks have also done nothing. Nobody likes them, nobody owns them. And generally, I see that there is a turf of growth which seems to be, getting made.
I would agree, like especially for HDFC Life, the expectations were low. They reported decent numbers. Stock ran up. Now it's consolidated a bit. So I think that could potentially be one stock from the insurance sector which could do well. Similarly, ICICI Lombard number on general insurance were pretty decent. ICICI Pru on life insurance on SBI Life were muted, not as great. But overall, that the industry has gone through a long phase of consolidation, and I would agree that there could be potential opportunities. So, from the results which have come out and outlook, I think HDFC Life stood out among all the companies which have reported till now.
Came out with numbers. The stock in a otherwise very ordinary market was up 14-15% yesterday. Go Digit is it's one of those general insurance companies. We don't talk about it. Small, but yet they've been able to have impact per se. What do we have? Kalpataru Power has got a new order of 2,000 crore. So Sandeep, if one works with some assumptions here that government spending will normalize, nothing negative comes or nothing majorly negative comes from the US market. Sooner than later, Reserve Bank of India will be forced to cut rates. Economy will start normalizing. So then what becomes a go-to sector? Should one go back to cyclicals, government dominated themes, or should one go back to consumption, which is where also there could be a turn? Because both the things could turn, Sandeep, for better. Government stroke capex or consumption stroke rural?
The consumption should turn around. So I think consumption stocks which are beaten down, I think surely any investor or at least a low risk investor who's happy with a 15% kind of return, I think most of the consumer stocks from current levels should be able to deliver that because let's say this festival season, given that the base of the last 2 years is so low, we could suddenly be looking at many of these companies actually growing very well. And once the good numbers start coming in, because these companies don't raise equity, their liquidity is low, moves tend to be fast at that time. So I think whoever has to accumulate, I think these are good times. You accumulate, you wait, and eventually you get returns. The government spending behavior has been very intriguing. The government knows that there's a slowdown, but still the government capex, government spending has not picked up. Now, what is leading to that? Why this stagnation is there, and what's their thought process? I think it will become clear in a week when the budget comes in. So, ideally, logically, we should expect government spending to pick up, allocations towards capital expenditure should pick up and should be much higher next year than this year. But I think we need the action out there to come through. But again, because of lower government spending, lower project announcements, lower order wins from many of the companies uh, on the infra capital expenditure side, many of these stocks have also corrected. So potentially there could be an opportunity in many of them.
But Sandeep, what's the commentary looking like from Unilever? Because it still seems that they're in that transitioning phase. They're still talking about a slowdown, and at the same time, they're going and acquiring and enlarging their premium portfolio, at least in the BPC segment.
I think they should be doing that. It's been a company which has not been adapting to change. So I think if they adapt to change, they get into segments which could potentially go faster. That could add to volume growth. Now, the price of acquisition, etc., is something which can be debated. But then I think the move is a right move. So HUL post result again, it's corrected. So around 2200, even HUL would, I think, factor in most negatives. And from there, the peak of this year, last year itself, if you see, was 3300. So even if the stock goes to that level, not this year, even in 2 years, then also from a relatively safe FMCG company on a CAGR basis, 2 year returns can be very strong. So I think that's how I tend to look at many of these consumer names that can they go back to the same level which they were at last year's peak over the next 2 years, 24 months, and then what's the CAGR? If it's 15-20%, it's really strong.
Let's look at consumption, Sandeep. I can divide it into plenty of pockets now. One is urban consumption, where I would say it could be Zomato, it could be Swiggy, it could be to some extent QSR companies. Then there is typical rural consumption, which we all know is represented by Dabur, Nestle, and HUL or Godrej. And now then there is this new gen consumption, which in a sense is represented by Zomato and Swiggy. What within consumption will turn?
I think all should turn. QSR, like you mentioned, is an interesting space. It's gone through almost 3 years of slowdown. And that's where we could actually potentially start seeing green shoots, especially if the food inflation also stabilizes. And there, the stocks have actually done nothing for 3 years. In fact, many of those stocks are down. So I think that could be a contrarian space to be in. Other than that, I think For Zomato and Swiggy, the issues are more about the strategy, like the food delivery, etc., or the quick commerce will grow. But I think the amount of money, especially Zomato, is putting behind quick commerce, which could be low ROE and lower return than a food delivery business. More capex is going towards low return business, and that is the bigger concern out there.
Trend or a Zomato for that matter? And are you now then betting big on some of those bottom up opportunities like you just mentioned, beaten down FMCG names, or for that matter, even QSR? Sandeep?
Yeah, some of these companies, due to their internal strategies of where they are investing, have their issues like Zomato. Trend is more about a valuation correction rather than there being anything wrong with the strategy of the company. So analysts and investors went overboard in the kind of valuation. It was we given like 150 PE and all, not sustainable. And when the stock is moving up, no one realizes that it is not sustainable. But then when it actually happens, then people start talking about valuation. So we've seen trend correct from 8,300 odd to 5,700. So now, where it will bottom, can it bottom around here, or is there a further downside? Will depend on how the results come out. Because to sustain even 70, 80 P, you need very strong earning deliveries. That's something we need to see. But overall, what the company is doing as a strategy is very good, and the company will do very well. Stock price says move up ahead, then they adjust, and in the adjustment process, they'll give up more opportunities to buy, I would say.
So, where is it that you would add a fresh on a Zomato and a Trent, Sandeep? Any levels that you've marked out?
So Zomato, not right now. I think we'll see how their strategy of investing so much or behind quick commerce pans out, because it's a very competitive sector. Uh, Trend, let's watch out. So I think yeah, after a 35-40% correction, typically such stocks will start bottoming out at some stage. So we'll watch out and take a call. Let the results come out. I think then we will have a better perspective.
Okay, in wait and watch mode on the earnings for Trend. But Sandeep, good to have you on the show as always. Thanks for your time. And since we're on the subject of Trend,